Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, May the 29th, the year's 2022. Let's talk trading. Weekly, open, and gap. These videos are for educational purposes only. Your results may differ from mine. Okay, we will begin with looking at the week or the monthly chart here. We've only got about a day and a half or so left in the month. And right now, we're basically in a holiday in the USA, even though it's still Sunday night, it's holiday weekend, Memorial Day. And we're about 7.5 hours into the trading day. And so far, we are now 66 above the monthly open, 488 off the monthly low, and 24 off the monthly high. For the week so far, we are 38 pips above the open, and now 37 pips above the low in the open and 15 off the high, and all of the gaps have filled. Notice most of the pairs gap down, with the exception being the euro pound. We opened above and are still above the opening range for the month. We're 883 pips below the yearly open. And we're still above the inside bar that happened 3 days ago. We've got a handful of inside bars on the daily, a little bit more on the weekly, and about a handful or so on the monthly for the inside bar traders. So far, no pairs over 100 pips in range. Pound clocking in at 52 pips at the moment. Once again, it is a holiday weekend in the States. I'm wondering if the London traders are going to run the price up here. And then come Tuesday, the U.S. traders will push it back down. But we'll have to wait and see what happens. Just so you know, right now the pound is in the launch pad in the 40s. It hit it the first time, ran up like it usually does, giving a good trade, even though it was on a Sunday here in the US. The range is large enough for rats. It looks like the red rats have already had a couple of, at least one trade here. Looking at a rat reversal, green candle closes, red candle closes within the rat zone, and then you take the break of the low of this second candle here, this red candle. So that would have paid off for a few pips. Pivot trading plan says near the pivot, the bias is short. And that didn't seem to work out very well. The Bambino Flex indicator, on the other hand, said to trade long. And that definitely did give you an opportunity to take profit. Monthly pivot, we've missed it. Weekly pivot so far this week, we've missed it. We missed last week's. Looking over here, out of the last 250 weeks, we've had 2 consecutive misses 13 times. So that's what, about 5% of the time. Daily, we've taken out the daily pivot. So far for the month of May, 3 missed pivots. So 2022 is really putting up a bunch of missed pivots on the daily. Very interesting. Wick zone. Not much wick zone action at the moment. We were in and out of it once, in and out of it twice. On the downside of the previous day's upper wick zone. Right now we're sitting right here in the wick zone. Break at 26.66 to the north and 26.29 to the south. Weekly range so far is only 52 pips, same as daily. Not much to write home about. Looking at the ranges here, 3 hours ago we had a 33 pip range candle. As I said, it hit the launch pad, took off, and you can see here it's still hitting the launch pad and moving up. So you could take, 5-6 pip scalps off of those trades. That's one thing. I really hate shorting in the launch pad. I've gotten burned, and you can just look back. It just seems every time price comes up to that 40 line, it just likes to run, 10 or 20 pips. I don't know what it is about these prices in the 40. Maybe there's a algorithm, some bot out there, automatic trading that does that. Or maybe it's some trader that likes to push the price up, or some bank. Just don't know. I can just observe. You can see here the lower high. We had a 2-ball, came through, gave an opportunity. 1 ball came in below that lower high, same lower high, and price crossed above here to 37.9. Once again, given an opportunity, even on a Sunday/Monday slow period, still opportunity to take those trades, and market smiled and gave an opportunity to profit. And that's one thing, traders, you have to understand, is that the market only gives you an opportunity. You have to take it. Many traders just don't seem to understand that. They'll say, well, I took 2 and I left a bunch on the table, and then the next time I didn't take 2 and it stopped me out. What do I do? What do I do? What do I do? Well, what you have to do is you have to have a plan that doesn't require you to think, because sometimes the market moves too fast for you to think. There's so many different things that you can think about. You can just talk yourself right out of a trade or talk yourself into a trade. But if you just have a simple system like the lower high, higher low, and you say, okay, if price comes, price opens below this line, comes up to the line, I'm going long. That's it. You don't have to think anymore. You don't have to analyze anything. You don't have to look at any different charts. You don't have to run any statistics. All you have to do is take the trade. And then if the market smiles upon you, gives you a profit, you take the profit. When you enter the trade, you decide where you want the stop loss to be, which would be kind of obvious. It should be right below this 2-ball here. So if price comes down and hits your stop, well, hey, that's just trading. But the thing about it is you don't get mad, you don't get happy, you just trade. And that can be easier said than done, and that depends on the person. Depends on if you have your emotions in check. Do you have your brain management engaged? Because that's all it is. It's just managing your brain, because once you're in a trade, you're either going to manage the money, or you're going to manage your brain, or you're going to react to what's happening on the chart. So for example, what did we have? We had a 2-ball, price came down, crossed the 50 line. Maybe you say, you know what, I'm going to I'm exiting it. Cross below the 50, that's a psychological number. Or you go, wait a minute, if it crosses below this one ball, this previous high here, then I'll exit the trade. That's something for you to decide. Or you might say, you know what? It's making higher lows. Even if it crosses below, there's no reason for me to enter the trade. I'm going to take the chance that it's going to continue to make higher lows, and I'm going to stay in that trade. So how you do it is up to you. There's no right way. What there is there's profitable ways, and you just have to determine it. But it's just so hard, it seems, for traders to let go of what happened before they entered the trade. All the analysis, all the chart work, all that effort you put in, and then you finally pull the trigger and the market maybe turns against you and you get upset. It's just the way it is. You put too much emphasis on the reason you entered the trade. Meaning, you think the reason you entered should somehow guarantee you a winning trade. No. So long as you enter when you're supposed to enter, and it's up to the market. Either smiles upon you or it doesn't. Now, the other thing that can be really, really frustrating, and we've talked about it before, you enter the trade, you set your stop, price takes out your stop, turns around and goes up to the moon. Well, why did you set your stop where you put it? And if that happens to you more often than not, there's a few things you can do. Maybe there's something about your methods that's just not working. Maybe you need to make an adjustment. Maybe you need to only enter with half of your lot size and then double the width of your stop. Give the trade just a little bit more breathing room if that's what's happening to you. So you have to be patient with the trade, just like this trade right here. I mean, it's come down, it's came across the 50, came through that one ball high, but as I mentioned before, there's another option. And that is, hey, it's making higher lows. There's no reason for me to exit that trade quite yet. And that's just, sometimes that works, sometimes it doesn't. But usually, if you ever look at the bigger candles, some people call them momentum candles. Well, what happens is usually that momentum pushes price up just a little bit further. You had one here, price came down into it, and then it got pushed up again. Here you have a big one here, price still was making higher lows. Right here, it made a lower low, and maybe you wait and see, it pushed up, it opened, it pushed back down, broke that one, didn't break this one. Maybe you stayed in the trade, maybe you got out when it broke that one. Either way, if you entered down here, you had a nice run. Nothing to sniff about or cry about. So right there, you have to decide if you hadn't taken your exit here at 50 or maybe at 48.7, now you see you've got a bearish candle. It may be time to get out. So, fellow traders, I hope maybe you got something out of that. And I hope you had a fun and safe holiday weekend, even though we've got one more day of the holiday. Just be safe out there. And when you sit down at your trading terminal the next time and every time, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.